Hello, happy Tuesday, and welcome to the April Embrace Showcase. We at Embrace Network, we do a monthly showcase where we like to give an opportunity to spotlight some of our members so they can share their expertise and wisdom with you guys, more than just an introduction. So you get to know them a little bit better, and this gives an opportunity to build trust, and it will improve getting great referrals. The more you get to know someone, the better referral you can give to them. So I would like to introduce to you the lovely Derek Villemaire of RE/MAX Solid Gold Realty and Csilla Adkins of the Greater Golden Horseshoe Mortgage Alliance. So Derek has been a realtor for a number of years. He's actually an award-winning realtor who is so heart-centered and so client-focused. Derek will do what he needs to do to serve his clients and make sure that they get the best experience and end up with the home that is right for them. And Csilla Adkins is our mama bear of Embrace Network, and she will get the job done. That woman is so hardworking. Csilla is so determined to get the right solution for her clients. So I'm going to turn it away to Derek and Csilla to take over and share with us some of the traps and some tips for the current real estate market. So Derek, over to you.
Awesome. Thanks for the introduction, Shannon. Good morning, everybody. We were discussing that there are some things that people know and don't know when buying a house. Even people who have been repeat buyers, particularly first-time buyers, those are the people that tend to lack a lot of the knowledge. There's a lot of information you can pick up on, searching online, but there's no anecdotes. There's no experience behind that. It's just strictly, point form facts, and it's very lacking, I found. So some of the notes that we're going to discuss today are going to be based on a home buyer coaching or counseling session that I often offer buyers. I particularly find that first-time buyers find that time well spent. And what we're going to do is I'm going to toss it back and forth between myself and Csilla, and we're going to cover a lot of topics in a short period of time, and I hope that you find some benefit in it. I'm going to share my screen now. And perfect. Can you see arranging a mortgage, the pre-approval process? Perfect. So one of the first things that happens when a buyer contacts me, even before we start talking about what is your preferred home, where do you want to live, what does it look like, what's your wish list, what's your wants, what's your deal breakers, and all of that kind of information. One of the things that I ask them about is, have you been pre-qualified for a mortgage? And sometimes I'll get, hey, you know what? I went to one of those online mortgage qualification things where I put my income in and my area, and it spit out how much I could afford. And I said, well, there's more to it than that. There's more to the pre-qualification process. Unless you've met with a lender or a mortgage broker to go through that process, that is not a pre-approval. It's kind of just a magic wand, and it's not something that I would want to base any offers upon. Okay, so what are some of the benefits? I've got that up on my screen. Some of the benefits of getting pre-qualified is that you're going to look for the right homes in your price range. And so we're not going to be looking way outside of it where we're setting expectations that we simply cannot fulfill. We can often save money dealing with a seller who's comfortable knowing your financial qualifications. So when I'm representing a seller and buyer agents are bringing their buyers and they're presenting an offer to us, one of the first things I ask that representative who's bringing a buyer is, are your buyers pre-qualified for financing? Oh yes? Who with? And I want to know that because I don't even want to take their offer seriously until I know that they're pre-qualified for financing. We can tend to close more quickly also when we're pre-qualified because we have many of our ducks already in a row. We minimize any trauma of not knowing that you qualify. One of the worst things is I always tell sellers that I represent, the best offer is not necessarily the one with the highest offer price. The best offer is the one that's most likely to close. And that makes sure that way we really want to make sure that the buyer is qualified and that they can afford this house. And also your mortgage representative will be able to help you highlight other closing costs so you know what's involved and you make sure you have enough money to close. So I wanted to ask Csilla, what is the difference between a mortgage pre-approval and a mortgage commitment? Because sometimes my buyer clients will say, hey, Derek, we're all in good shape. We've got our offer accepted. I guess we're good to go. And I prepare a list of things for them to do. And I said, no. We now have to get a commitment. Well, I thought I already got that from my lender. And I'll say, no, that's a pre-qualification. We now need to get a commitment. So what, in a nutshell, Csilla, what's the difference between a pre-approval? And if you could also tell us what's involved in a real pre-approval. What are some of the things that you're going to ask for from those potential buyers? I'm going to hand it off to you.
Thank you, Derek. Well, pre-approvals are, as you said, if you go to a mortgage broker or a mortgage agent, you're going to have to present your documentation, your income documentation, the property that you're buying, and we can help you figure out the amount that you can afford. And once we have everything, all the documentation together, then we present it to a certain lender that fits your needs based on what you shared us, based on what you're looking for. And when we have everything together and the lender reviews that, then they're gonna give you a commitment. And that is where we start from. And that period, about usually 120 days before closing, gives us time to satisfy the conditions from the lender. It's by the list that this is what we need in order to give you this mortgage.
What's an example, Csilla, of some of the documents that a lender will want to see to get a pre-approval in place before I start working with a buyer or an agent starts working with a buyer? What are some of the documents that you're typically going to ask for?
Last 2 years income verification, last 2 years T4s, if you're business for self, T1 generals, some of the more difficult, usually business for self is asking for bank statements that shows that you are actually depositing those invoices for those people, job letters and pay stubs.
Yeah, they want to show that that you have a regular source of income. I imagine they're also going to want to know what the source of down payment is. Is that correct?
Yep. You need to present the down payment, and the down payment needs to be in your account for 90 days at least.
Yeah. So let's say that we've got a pre-qualification and you say, Derek, this client is qualified for a purchase price of $700,000. And so we go out shopping together to look for a property. We find something that we like and we go to place an offer on the property and we get that offer accepted. My client then drops off the deposit and now they have a firm and binding agreement as long as there's no conditions, like a condition of financing, a condition of home inspection, insurance. Many of the offers these days and for the last several years have been unconditional or firm offers because it's been a very competitive marketplace. So
Derek, can I
what?
just interrupt you?
Mhm.
What are the implications with that? Like that to me, I haven't bought a house recently, but I know the very first house that I bought, we did an inspection. We found that there was an issue with the roof, that there was an issue with the foundation, and we were able to negotiate a better price to say, well, listen, we're going to have to replace the roof, so this is going to be our offer. Now that's not happening in this current market, is it?
It hasn't been happening for some time.
Yeah.
I won't say that it's not happening at all. When the market became such a strong seller's market that we were deterring buyers from placing a home inspection condition. And it wasn't because we didn't want them to have that protection. It was more saying you have to make a choice in this market between having very excellent buyer protection, things like conditions of home inspection, or getting the house. And it seemed more important for people to get the house, especially as
Right.
prices were escalating. Now
Yeah.
we found a couple workarounds. Every now and again, I would say to my clients, what we could do if the not looking at offers for 4 or 5 days from now. And we've seen the house on Thursday, and they're looking at offers Monday night. Common practice these days, right? Doing offer holdbacks. What we might do is see if we could do a pre-offer inspection. So it's an abbreviated inspection. Many home inspectors, their governing bodies are trying to deter them from doing this, and some sellers and listing agents won't allow them, but others will. And they'll say, yeah, we'll give you an hour, just book a regular showing for an hour, come through, do your home inspection, because that's great. Then we don't have to worry about having a home inspection condition when you submit that offer. For sometimes it makes a difference. Some sellers will say no. And because they don't
Right.
want you to be something to potentially be discovered, which they would later have to disclose, that they'd maybe have to disclose to all potential buyers. So it
Right.
might put them at a place of risk. And some sellers are doing what they call pre-listing inspections. So what they're
Oh,
doing before they even list, they're having a home inspector come in and they're making that home inspection available to all potential buyers and their agents. And in that way, the buyer is more comfortable. They can
yeah.
review the home inspection and just double check and say, okay, you know what, I'm comfortable with what they found. Or, you know what, those are very minor things. I don't mind that, but there's no major things. As
Right.
buyer agents, we have to be careful not to pass ourselves off as home inspectors. However, a good agent will have a careful eye, knowing that there is not may not be an opportunity to have a home inspection done.
Yeah.
So good agents will go through with their flashlight and they'll be looking for signs of issues, water staining on baseboards in the basement, signs of mold, that type of thing. They'll be
Yeah.
looking for the big ticket items that are potential problems. So
Right.
that's something that I kind of tend to try to do, but to say this is not a replacement for a home inspection.
Yeah.
Some clients will choose to get a home inspection done after they close,
Right.
just for peace of mind. Yes,
Yeah.
they've already bought the house. They're in for a penny, in for a pound, but they'll
Totally.
do
But
it
at least they
sometimes
know.
simply
Yeah.
for peace of mind.
Yeah. Okay.
But it is a problem. It is a problem that sometimes we don't have that opportunity to do a home inspection. It's a bit concerning for the whole industry as a whole. Yeah. So I'm going to scroll. I'm going to roll back to the next item. So we talked a little bit about Csilla about pre-qualification. If I bring an offer on a property and it's accepted, and we have a firm and binding agreement, I'm going to suggest to my client now that we know the property that we've offered on and effectively purchased. We haven't got the keys. We're not going to get those for 60 days. However, there are some things that we still need to do. You need to get a mortgage commitment. So I'm going to send a copy of the MLS agreement to you to forward to your lender. and your lender is now going to undergo the commitment process. And quickly, if you can just tell us, Csilla, what that involves. What does the lender do, and what makes this different than a pre-qualification?
To get the commitment is we need to fit into a certain ratios that we were talking about earlier, that you need to know how much you can qualify for. And based on that, the lender is going to ask for all those documentation that we prepared upfront, for your job letters, your income verification, anything related to the property. And then we're going to send the appraiser out to appraise the property based on the lender approval list.
Csilla, what happens if my client purchases a property for $800,000? The lender sends out an appraisal, and their appraisal says that the property is only worth $780,000. Can the deal still go through? What happens if that comes up?
The lenders that's why they're sending out their approved appraisal company to assess that is this really how much that property worth, and they're going to give you the mortgage according to the appraisal value.
So they'll support a mortgage for up to the appraised value, 780, and they're basically going to say to you, you've got to come up with the other $20,000 that's in between the 800 that you paid and the 780 that we're going to give you a mortgage for, correct?
Absolutely. And
And
you said 20,000, but in these days there many people are bidding over 100 and 150,000.
Sure, but in this example, we've paid 800,000. It appraises for 780. There's a shortfall of $20,000. More or less, the client has to come up with a difference of about $20,000. I know there are some variables in that type of thing. They're going to be paying less CMHC mortgage. Let's talk a little bit about that, Csilla. If for mortgages, there's two types of mortgages, and many people know this. There's conventional mortgages and there's high ratio mortgages. So what is considered a high ratio mortgage that would require something like mortgage insurance?
That's the high ratios are the 5% down payment, and if you do the 5%, then you have to pay the CMHC fee mortgage insurance.
So the minimum is 5%. What would be the maximum? At what point does it no longer become a high ratio mortgage, but become a conventional mortgage?
20%.
20% is the magic number. Right. And will the buyer pay less mortgage insurance if they, for example, put in more than 5%? What if they decide to put down 12% down payment or 14% down payment? Will their CMHC or mortgage insurance fee be better?
Yes, absolutely. But there's actually the scale to 0 to 500 is the 5%, and 500 to 1,999,000 is 10%, and above a million is 20%.
Right. Now, we talked a little bit about this, you and I, before, that it's not automatically, if a house is $700,000 purchase price, they don't necessarily have to have 7% down payment. They have to have 5% down payment on the first 500,000 and then 10% on the amount between 500 and a million. So it's really a blended rate, like it would be 7% or 7.5% or that kind of thing. But over $1 million, it hits 20% automatically. Everything above $1 million is 20% down payment now. Isn't that correct?
The different lenders use different scales for that, and those are the higher mortgages. And mhm.
So if I pay 999 for a property, then I'm under $1 million, and I don't have to put down 20% down payment. But let's say I buy that property for exactly $1 million. What would be my required down payment percentage?
At 20%.
20% down. Yeah. And that's complete 20%. It's not a blended rate like that other one that we talked about. Now, what happens if I put in an offer that's accepted for $1.25 million? Is it still 20% down?
It depends on the lender. Some lenders are using 1 million cutting point. Some lenders are using 1.250 million, and some lenders are using 1.5 million. And above that, they will decide the difference above that amount is either 50% or some of them are 80%. So you have to be very careful. It's every deal is different. So
So
you
we're
need,
now back to a blended down payment amount. On the first million, it's going to be 20% down payment, but on the little bit above, it could be 50% on that amount. So when we're now blending an amount, right? So 20% on the first mill, and then above that, depending on the lender, it could be 40% or 50%. There's a what they call a sliding scale, correct?
yes,
Depending
absolutely.
on the lender, it's different sliding scale for different lenders.
Yes.
Yeah. And I
So
found that
if you buy a house for 1.5 million, and the lender cutting point is 1.25, then you are. I'm so sorry about this. Okay.
yeah, so you're saying on a purchase price of $1.5 million dollars.
Yes. Then the 250 is going to be the difference is going to be your 50% for that particular lender.
Gotcha. Gotcha. Yeah. So, and that's important for people to know because people think, I found many buyers believe that, oh, I just need 20% down if I'm above a million. And we have to have that discussion. No, it might actually be a little bit more because once you get above a million, now we're on a sliding scale and there's going to be it's going to be a little bit more. So we're actually finding some buyers will bring an offer on a property if they think they can get it for 999,999, and you're going, what the heck is this? And then you get it. They're trying to stay under that $1 million mark. Perfect. Thanks, Csilla. I'm going to move on to the next item. So there's a section here called buyers and their finances. And we talked about that scenario of what happens when we have an offer on a property. It's been accepted by the seller. We've dropped off our deposit within the time frame that was allowed. We now have a firm and binding offer, and we're going to proceed to completion in, let's say, 60 days. We haven't got the keys yet, but we've effectively made a binding agreement to purchase the house. There's some things that you should probably do and not do, and this is the list of do's and don'ts. Don't change your job or become self-employed or quit your current job. Not until you get the keys. Okay, if you want to change those things, but not until you get the keys, until the title is transferred and the money has transferred. Do not buy a car, truck, SUV, or van, or you may be living in it. Okay, now you might be able to speak to this, Csilla, about people who, between the time that their offer is accepted and the time that the completion date when they get the keys, that they make purchases, and what would happen to their debt service ratios, their what would happen to the math on their mortgage pre-qualification if they were to do that?
It's really, really sensitive. Okay, don't do anything because whenever you get your condition, like your approval for your mortgage, that's what you need to present in 120 days, that you're still the same position where you were 120 days ago. And that's when it comes into that ratio. It's a very sensitive scale that the lenders are using based on your 5% down or 20% down or whatever is down. And you need to fit into those ratios. The GDS and TDS is a gross debt service or a total debt service. I'm cheating here.
Yeah, not a problem.
Yeah.
So let me ask another question, Csilla. If I have a buyer that says to me, "Hey, Derek, we have a mortgage commitment. We've got the pre-qualification. We bought the house. Went through the appraisal and underwriting process. They sent us a commitment to say, hey, if you can provide these documents before closing, we'll make sure the money is there." Can that lender check things like credit and debt service and check if it's right up until the closing date, or is it a done deal?
They are checking everything, and they are checking from the beginning of the process, and then they will check at the end of the process to make sure that you didn't co-sign for your son's house, that you didn't buy that truck or the camper or anything that will make that scale move
Right.
your
Yep.
liabilities. So they make sure that you didn't spend the money that you said you have.
Yep.
So
Perfect.
if I can just jump in to clarify, so it's not a once and done, like, oh, okay, so we have a commitment and now I'm free. It's not that snapshot in time. It's actually, it has to be upon closing that all of the ducks are in a row at that point.
Yeah, that's correct, Shannon.
Okay.
There's only one lender that was using it as a marketing strategy to tell the public that when they give you a commitment on a mortgage, they close the book and they will not open it again
Right.
before closing. So that kind of gave people a warm and fuzzy feeling, but still, the buyer still needs to be able to make those payments. So, there's no use hiding that from the lender. So
Yeah.
I'm going to move on because we have some other stuff that I wanted to cover. One of the other things is not using credit cards excessively or letting your current credit cards fall behind. Don't spend the money you've set aside for closing. So there's three ways or places that money is going to come from a buyer. So when we place an offer, they're going to have to place a deposit. In legal terms, they call that consideration. And so what that is they're often asking between $10,000 and $30,000 on the listing, MLS listing. So they'd like you to put a deposit. That deposit will go towards your down payment. So if you're ready to bring a $100,000 down payment on your purchase and the deposit is $20,000 at the time of offer acceptance, at the time of closing, say that's 60 days out, you have to come up with the rest of the down payment. There's that $80,000. There's going to be some disbursements as well and some closing costs. So you've got your down payment and deposit, they're together. You've got your mortgage, which someone like Csilla is going to provide. In addition to that, you have closing costs. You don't have to have that money available until closing. And if you're a first-time buyer, it'll be around 1% to 1.5% of your purchase price. If you're a repeat buyer, it's typically going to be around 1.5% to 2%. You need to keep that money aside. You don't need it until closing, but you can't spend it on other things. So don't spend that money. You're going to need it. It's going to go towards lawyers' costs, land transfer taxes if applicable, and any disbursements that need to be made. Okay, so don't mess with that. Make sure that money is there. When you're giving information to someone like Csilla, don't omit those debts or liabilities. Don't try to hide something, because they're going to find out. It's going to come up. You can't hide it. If it's off the books, that's one thing, but you probably shouldn't hide it anyway, because you still need to have the ability to make those mortgage payments. So you're really not fooling anybody. Do not buy furniture on credit. Don't originate new inquiries into your credit like do not pay till 2025 at Leon's or the Brick. I've gone through this where I've had clients say, hey, you know what? We've been living in this apartment for 10 years. We've got this crappy IKEA furniture. When we move into our new house, I'd really like to have some brand new furniture. And the Leon's has a do not pay till 2025. Won't it be great? We'll have it delivered on the same day that we get the keys or the next day. It'll be fantastic. And I'll say, no, don't do that, because it's going to show up. The lenders are going to see that there's a new liability. It's going to affect your debt service ratios, and you may not be able to close on your property. So do not do that. Okay. It can also affect your credit score. And some people don't know this, but the interest rate that someone like Csilla and her lenders can offer you, the better your credit score, typically, the better the interest rate. So the higher your score. And some lenders have minimum scores. They don't want to lend to somebody that has a credit score below a certain amount. Csilla, what would be the magic number for a credit score where they just kind of, don't really want to, or it's harder to work with an A lender and you'd have to go to an alternative lender? What would be that number? Can you tell us?
Yes and no, but the number would be 650, 680 and above.
Oh, so we're within that range.
Within that range. And talking about credit scores, you can improve your credit scores. If you have, what they're looking for is to make sure you don't go over your credit.
So how much should somebody keep as a balance on their credit in a percentage? Is there an ideal percentage?
Absolutely. So it's better to have more credit cards and keep it below 50% instead of one credit card is up to 80, 85% and the other one has nothing on it. So you spread it and keep it below 50%. Well, you have to make sure that you pay at least your minimum payment on a credit card, and keep it under 50%.
Csilla, what if there's two people going to be on the title and two people on the mortgage, and one of those persons has a really great credit score and another person has kind of a low credit score, like below that 650 threshold? Can we still get them a mortgage?
We'll definitely try to get them prepared and get them higher up. Use certain strategies to higher their credit score, but some lenders are looking at the better credit score client on the application, but some lenders are looking at the lowest credit score. So it's kind of like you losing your choices. You have less choices to.
Is there an option for them to go to? I talked briefly about A lenders, and there's other forms of lenders as well. And is there options for them as well? Maybe lenders that aren't as desirable, but they can still have access to the funds.
Yes, definitely. The B lenders are. Have a higher ratios, and of course they have a higher interest rate. And
so the debt service ratios are more permissible, but you're going to pay for that in your mortgage, your interest rate.
And you have to have a minimum 20% down payment. There's no high interest.
Gotcha. Gotcha. Is there any scenario in which a buyer could purchase with less than 5% down? Are there any lenders that would offer that option?
Not that I know of. Not at this point.
Okay, I just thought I'd ask. Perfect. So
Yes.
the other thing that I had highlighted here, a do and don't, is don't make large deposits without checking with your loan officer. So if Uncle Harry dies and leaves you an inheritance and you want to slip that into your bank account as an additional down payment to increase your down payment, do let Csilla and someone like Csilla know where that money has originated from. Okay? Don't change bank accounts and don't co-sign a loan for anyone. That came up when a client of mine wanted to co-sign for her son because of his employment was under contract and it was more difficult for him to get a mortgage. And she said, "Well, I'll just co-sign on her loan." But when they did a credit check on her, they said, "Oh, what is this loan for?" Oh, and she says, "Oh, I co-signed for my sister, but that was like 7 years ago." She had completely forgotten that was on there. They were still able to put together the deal, and the loan may haven't even been repaid, but it was still showing up. And so it's something to be aware of. Okay.
I have to add to that when you're doing your pre-qualifications or you're coming to a broker, these things are going to come up and it gives you an opportunity to fix them.
Yeah.
If you have to call Equifax, or um, if you have to improve your credit, then your mortgage broker or agent can give you um, the tools that this is what you need to do in order to get
Yeah.
that. Yeah.
Yeah, because sometimes things will come up on the credit report, right, Chilla? And people will say, "Oh my gosh, I cleared that up
Mhm.
years ago," but it's
Yes.
still showing on their Equifax report as a blemish or what have you. And it's a good way for them to kind of clean that up.
Student loans. I ran into a couple of them that the client didn't know that it's going to start in January. She started paying them off in May, and those months showed up that she's missed the payments and things like that. And that can be fixed and put you back into where you need to be.
Perfect.
So, mhm.
Good. Excellent. Thanks so much. So, one of the things that I like to cover as well is preparing the buyer client for house hunting. And one of the things that I say is once you've decided to work with a buyer agent, so you've had a meeting with them, you feel comfortable with them, you feel like they're knowledgeable and are going to look after their best interests. These are some of the suggestions that I make. If you go to an open house, and I encourage my clients, hey, if you want to go to open houses, that's great. What you'll want to do, though, as soon as you walk in the door, is to let them know once you've introduced yourself that you're working with an agent. And so just say, hey, you know what? I'm working with Derek Villemaire, and he suggested that I come to some open houses. And you've done two things. Because agents are not supposed to interfere with the professional relationships of other agents, you're now hands off. They're going to kind of leave you alone. Because now that they know that you're represented, they're not going to try to convert you into a potential new client for themselves. And so they're just going to leave you alone. And I always suggest go ahead and ask as many questions as you would like of that listing agent. Hey, why are they selling? Where are they moving to? Some agents are better than others. The better agents will say, I really can't tell you that. But some agents are chatty and they'll tell you all kinds of things. And it will really help put you in a position of knowledge. However, should that agent ask you anything about yourselves, your financial position, what you're looking for, or what have you, just let them know that your agent, your buyer agent, has suggested that you not share any personal information. And I even tell my clients, you can put the blame on me. To say, Derek told me I shouldn't tell you anything. And so the information flows one way. And that's the best way to protect yourself and not put yourself in a position of being behind the eight ball from a negotiation standpoint. As far as things like newspaper ads and websites, be aware that a lot of the magazines and websites have out-of-date information. They're there to bring leads, but they're not up to date. Your most up to date sources are going to be through a search that your agent has prepared for you. In our area, the system is called Matrix. It's very reliable. If it's up on Matrix, likely the property has not sold yet. And Realtor.ca, which is the consumer end of Matrix, if it comes off of Realtor.ca, then you know that that property is no longer available. But things like newspapers, websites, the magazines that you pick up when you go to your local restaurant, they're not really reliable for finding new listings. Okay. For sale by owners, I always suggest that if you see a for sale by owner, what we call in the business a FSBO, it's just a short form. It sounds like a clown. I totally get that. But you know, FSBOs, feel free, if you see one of those, you're driving around a neighborhood, feel free to take down the information, take down the telephone number, take down the address, and then pass that information to your agent. There's a saying in my business that we never really want buyers and sellers to directly interact. Why, you ask? It's the same reason why, if you ever watched an episode of Law and Order or any courtroom drama or police drama, why people have plaintiffs and defendants have lawyers. And the ones that don't have lawyers usually get themselves into trouble. And I find it's the same thing with buyers and sellers. Canadians are so polite, but the problem is they say too much. A skilled agent will know when to shut up and not disclose information that's going to put them at a disadvantage. And they've just had that experience and they have that knowledge, and it should be part of becoming skilled in their profession, right? So that's one of the things that we talk about. Likewise, if you get contacted by another agent, I always suggest, let them know you may have gone to an open house, you may have had an interaction with another agent, and just let them know, hey, at the time I wasn't, but I'm now working with an agent. This is my agent's name. If you have anything that you'd like to say, contact my agent directly. Again, you don't want to give up information that's going to put you in a place of disadvantage. So always keep in mind that that information can and will be used against you, not in a court of law necessarily, but in a court of finance. Okay.
And there's a difference. Sorry, just before you
Yeah.
go on, Derek, because the reality is buying a home is a negotiation. Like it's a deal, and you're right. There is a bit of a power struggle there, and information is the power, right? They're like, because if an open house agent is like,
Yeah.
oh yeah, I was chatting to people, they said that their budget was like $1 million, so we're good, right? Like that changes the way the negotiation will happen, right?
Some listing agents forget who they work for. And I'm not saying that it's a poor representation of the industry, but I will tell you that when we sign a listing agreement with with a client and we go through the documents with them, it says explicitly that we're to always represent the best interest of that seller. We are not to share their personal information. We are not to share their motivation to sell.
Yep.
Yet there are some agents out there that I believe they think that they're doing their clients a favor by bringing a buyer, by creating a relationship of sharing information that might bring that buyer to bring an offer. I believe that their motives are good. Mm-hmm. However, what I tell my buyers is that you need to remember that that listing agent represents the best interests of the seller. Yeah. If they're asking you information, that information can and will be used against you. It will be shared with the seller.
Yeah.
However, if they're a good agent, they're not going to share any information about the seller to you. Right. Yeah. And I go about it politely. If somebody asks me if I'm hosting an open house on behalf of my seller and somebody comes in and says, why are they moving? Well, they decided they don't want to live here anymore.
Right.
Yeah. And if they try to press, I say, you know what, I'm really sorry, but I can't share that information. Yeah. I have signed a listing agreement that says that I'm not allowed. I have a legal obligation, a fiduciary duty to not share that information. I'm sorry, but I can't.
And in this day and age of the Privacy Act, it's very clear what is private information, and 100% all of that information is private information, and you're bound by that contract to keep it private. So yeah, it's interesting. I hadn't really thought of it in that way. I am a chatty person. You know me, right?
Yes.
I'm like, I will just ask questions because I want to know everybody.
Oh gosh, yeah, and I've hosted open houses where buyers, unrepresented buyers, and some of them represented, have come in because they haven't been coached. They haven't been told what to do and what not to do. And they'll come in and say, they'll say, oh, you know what, this house is listed for 650. I know that things are going for a little bit more, but you know, I think we're in good shape. We've been pre-qualified with our mortgage agent for 750. Okay. Yeah. So I'm going to make a mental note of that.
Yeah.
And if they bring an offer for 700 and I'm negotiating on behalf of my client, it's in my seller client's best interest to say, you know what? I think that there's more meat on the bone. These people have been pre-qualified for 750. They've given that information up willingly. I have not put a gun to their head. I've not coerced them. I don't even ask them the questions, and sometimes they just give the information. So I coach my clients differently.
Give away all my, here's my hand. I'll show you all my cards.
So I tell my clients, you can put it on me. I'll be the black hat. And you can say, no, my agent, Derek, told me that I should not share any of this information. I'll be the bad cop. No problem.
Yeah,
no problem.
Absolutely.
Yeah. So the other thing is, if you're driving by a property, let's say there's a coming soon sign up, or as has been some common practice, or you're just slowing down, maybe the for sale sign just went up and you're in the neighborhood and you're circling around and you see the sign and the people out front are attending their garden. The seller is home and they see you slowing and they say, hey, I noticed you're slowing down and showing some interest in my house. Would you like to come in and have a look around? Your job would be to say, no, thank you so much. I'll have my agent contact your agent and we'll set up a showing time that's convenient for everybody and we'll come through then. Okay? Because again, we don't really want buyers and sellers directly interacting. It seldom ends up in a good way. Okay? And the last item on this list is assume when you are going through to do an open house or a private showing with your agent, assume that there are eyes and ears everywhere. Assume that you're being watched. Assume you're being listened to. So what that means is, should I go in and say nothing? Well, no. Go through the house and talk to your agent and talk to your partner or whoever you're going through the house with and say, hey, you know what? I really like this. I really like the way they did the layout. I like the finishes they chose. What I'm talking about is don't be going, oh my God, that is the ugliest wallpaper I've ever seen. What the heck were they thinking? Because what you could have done, if they're listening and they're watching, you could have alienated those sellers to the point where that if you brought an offer that was $1 million over asking, they might just say, I'll never sell to those people. I picked that wallpaper with my Meemaw. I love that wallpaper. And you know what I mean? So we could have offended them. Likewise, we never talk about financing while we're still in the house. And I remind my clients because some of them get rather excited and they'll say, Derek, what's it going to take to get this house? And I'll say, that's a great question. Why don't we wait until we go to the end of the driveway or to a local coffee shop or back to my office and we'll talk negotiation strategy then. I want to share a story with you. One of my associates at a brokerage I used to belong to, Susan, her name is, told me a story. And she was the listing agent. So she was representing the sellers, and her clients had audio video capability in the house. They had a video camera just under the eaves where the garage attaches to the house. She told me this story that some buyers came through the property with their agent, left the property, locked the door, stood right underneath the camera, and had a conversation about negotiating. And they said, well, the house is listed for $800. We'll go in at $825, but we could go as high as $850. So the sellers told Susan, and they had a discussion, And when the offer came in for $825, Susan and her sellers signed back the offer as a counteroffer for what amount? $850. And guess what they paid for the house? $850. So that's why we never really want to have those discussions while we're in the property. We always want to wait until afterwards, until we've actually left the property. And the other thing really quickly is we talked briefly about budgeting for closing costs. And just as a reiteration, there's going to be lawyers' fees, usually around $800 to $900 for the sale of a property, somewhere around $1,600 plus disbursements plus tax for a purchase of a home. Title insurance for the purchase will be built into your closing costs. People are now getting title insurance with their property. And title insurance kind of deals with potential property disputes later on. So, and as an example, there was a time that almost every buyer asked for a survey. And now surveys are, if you have one, sure, we'd like to get a copy, but they're not a requirement, not like they once were. Maybe 30 years ago, if there wasn't a survey, a buyer would typically ask for the seller to provide one, to pay for one. And they're now in the neighborhood of like $2,500 to get a survey done. So now they have title insurance. So if, for example, that somebody were to buy a property, my clients buy a property and they have title insurance, and they want to build a fence for privacy and for their pets and children, and they find out that the property line has been, the neighbor's deck is 1.5 feet on their property line. Now there's a dispute. So they would get in contact with their title insurer. And the title insurance company would often deal with a resolution. The resolution might be to disassemble the deck of the neighbors and rebuild it so that it's on their property. But that's the kind of things that title insurance deals with. But once again, just as a reiteration, make sure you don't spend that closing cost money. And again, normally a good budget is somewhere between 1.5% to 2% of the purchase price of the home for your closing costs. It'll be a little bit less if you're a first-time buyer. If you're a repeat buyer, count on it being conservatively around 2% of your closing costs. There's also a few programs available to help first-time buyers. There's a home buyer's plan that allows them to borrow each buyer, if there's 2 buyers, up to $35,000 from their RRSPs, and to repay them over a 15-year period without any taxation liabilities. Okay, there's a lot of detail there. You have to qualify for it. By the way, Csilla, can you remind me how long money has to be in an RRSP before a buyer can draw on that money towards their down payment?
It's 90 days.
90 days. Perfect. Thanks so much. So, some people, what they're doing is they're taking, if they had a great year, they're taking that money, they're doing an RSP contribution and getting a tax deduction, and then making sure that 90 days later, that's when the purchase of their property takes place. They're borrowing that money back and using it towards their down payment, up to $35,000 per person that are on title. And they get 15 years to repay that without any kind of financial penalty. If you have a bad year, for example, and on year 3, you don't pay back the amount that you were supposed to, you would only have to pay tax on 1/15 of the amount that you borrowed. You would get penalized for that 1 year, not for the whole amount. And so it's one of those things. It's a really good program that a lot of people are taking advantage of. First-time home buyers qualify for a first-time home buyer's tax credit. It's automatically applied by the lawyers. You don't have to send in paperwork or anything, and it's $750. There's a GST, HST new housing rebate if you purchase a new home. So resale homes are $800,000. Including HST, unless you're a foreign buyer or the seller is going to be leaving Canada, or they're a foreign seller. Okay, there's some implications there. But typically, when you're buying a house, if you're paying 800,000, it's 800,000 including HST. If you're buying a new build, never occupied home, it's plus HST, but there's an HST rebate that you can qualify for. Sometimes the builders will get you to sign over that rebate, and they'll claim the rebate and just give you a better price on the house. But there is an HST implication with a new home build. There's a land transfer tax credit for new home buyers, first-time home buyers, of up to $4,000. So if there's a land transfer tax, we're very fortunate in this area that we have just the Ontario land transfer tax. If you lived in the GTA, the Greater Toronto area, you would also have a municipal land transfer tax. So you'd get double taxed. Not a good thing. That's maybe one of the reasons why many people are, moving out of the GTA and buying down in this area. If you need to purchase a home and do special alterations because of a special needs family member, there is a medical expense tax credit that you can qualify for. So that's another item that may be available to you. Okay. So that's all the items that I really wanted to cover today. There's a lot of knowledge out there. There's a lot of information out there. I could cover a lot of different things, but we have a limited amount of time, and these are the kinds of things that I wanted that people might not have known, that there's some traps out there, that there's some things, there's the right way and the wrong way to buy a house. My recommendation is that every buyer have their own representation. It's a very challenging market out there, and to buy a house, even privately, without a guide, without a trusted advisor, and I've helped buyers purchase privately owned properties that were not represented and weren't on MLS, and I was still able to provide representation and advocacy for my buyers, and the sellers were happy to work with us and pay a small commission to my brokerage. So it's not, you're not giving that up, that ability to buy from potentially a private seller. So that's all I really wanted to cover. Shannon or Csilla, do you have any questions for me? And also, Csilla, is there anything else that I didn't ask you that you wanted to add?
I just wanted to mention something about latest increases with the interest rates that everybody's asking. I just wanted to touch upon that. The fixed interest rate versus the variables that everybody is asking right now, what would be the better option? It's based on each client. If you are not comfortable with the changes, the monthly changes, the fix, close fix would be a good option for you. It stays the same amount. For the time frame for the 5 years or whatever is your mortgage closed. With that, the downside would be very careful of penalties with the fixed rates. If you are thinking to even sell the house or do any refinance, you have to be aware of the penalties to break that.
So, for example, if you had a 5-year term, Csilla, and you decided to sell the house and move out of the country or maybe out of the province, and you wanted to basically break your mortgage, break your contract with the lender, there would be financial penalties involved
Oh,
typically.
absolutely, absolutely. And the longer the term, the more months, the more the penalties, the higher the penalty is. So you actually, each lender, you need to call them and ask them to calculate the penalty. And if it's a fixed closed, it could be very pricey.
Chilla,
That's
we heard a while back about changes in the industry involving the qualifying rate, or this, what some people refer to as the stress test, and how are the recent changes in interest rates in the Bank of Canada rate, how are they affecting that qualifying rate or stress test rate? Can you share a little bit about that?
There is the stress test is right now is 5.25. It's been that for a while, and you basically qualifying for those ratios are based on that 5.25, or um, each lender um, has their own interest rate, either the qualifying rate or interest rate plus 2%. So right now, because the interest rates, the fixed went up higher than in the last couple of months. So if your interest rate is 3.75, then you're no longer qualifying for the 5.25. You are going to be qualifying for 5.75, because either your qualifying rate or whatever is higher, the plus 2% interest rate. So
These
that
are
means,
qualifying rates. They're not the rates that my buyer is going to get and have to pay. But they have to qualify their income and debt service ratios. So this is going to change their debt service ratios, isn't it?
yes, it does. Yes, absolutely. And that what that means, it's a little bit, it sounds complicated, but it's basically less buying power.
Less
That's
buying
what,
power.
yeah.
Perfect. The one of the other questions that came up, and it comes up with a lot of my buyers as well, is they'll say to me, "Well, Csilla, if I get you to do a mortgage pre-qualification for me, is that going to affect my credit score, or what is going to affect my credit score?" Can you kind of talk to that a little bit? Do you get that question?
Yes, absolutely. And if people are getting into the process, the buying process, like they want to buy a house, and they're going to different lenders or different banks, different institutions, and they're pulling their credit. It's like we were talking about the soft and the hard checks, right? Hits on the credit score. It is going to affect um, your credit score. But if you are, for example, going to 4 or 5 different, well, usually it goes to three, four financial institutions, that will count in 30 days. It will count as one hit. If you are going to a furniture store, buying a new car, anything like that, different different purchases, that is going to count each one of them. And it,
So yeah, so even if you don't go through with the purchase, but even if you see if you qualify for that purchase,
if they
that's
pull the
that's going to
credit,
count as a hit, and it may affect your credit score.
yes, yes, it
Okay.
does.
Okay, great. Okay. Was there anything else, Chilla, that you wanted to cover off that we didn't
It's
cover?
totally the credit scores. It's like if you have a credit card and they offer you increased limit, um, take it, because it's going to give you, it's basically a the credit score is it's a risk assessment for the lenders, right? So that means, think about your kids. You give them a $200 and they spend only 30, and you know that, oh yeah, yeah, he's okay. If he spends 185 immediately, that it's a
Mhm.
little bit more risky for them. It's the same thing. So
Yep.
the other thing is, if you have a credit card that you don't use anymore, or you think you don't want it, um, you don't need to close that. because it's going to give you a credit history. When they pull that up, and if you close it, it disappears. So you don't have that amount of time that is going to show that you had that. And the availability to that amount of money is there and you're not using it. So it proves a little bit of it proves your being serious and being responsible for your finances.
One other question that I had for you is, are there lenders that don't depend upon the qualifying rate or the stress test, or does every lender depend on that?
Every lender depend on that, but some lenders have special products that are using contract rate to qualify, meaning they're not using the 5.25, they are using their own. And those are usually a little bit higher and they are using different measures.
So are they outside of that governing body that says they have to use a qualifying rate, but you're going to pay more for it?
Yes. And those are usually the B lenders, and they require 20% minimum down or even more. It depends.
Okay, perfect. Great information. Thank you. Yeah.
We also have private lenders that are that can help you out for short-term, immediate mortgage request. If
Okay.
needed.
Gotcha. So there's lots of alternatives out there.
Absolutely.
Okay, good. Shannon, was there anything else that you could think of? Was there any questions that you came up with while we were going through our presentation?
Well, you brought it up actually. I was going to ask about all of the mortgage calculators that you see, that you can put in and see what you qualify for, but they don't actually check your credit score, so they can't. It's not a true accurate assessment of what you actually qualify for, right? So
Yeah.
the commitment you get from the lender, that's when they actually run your credit score, when you provide all of that documentation. Is that right, Csilla?
Absolutely, and it includes your liabilities. So
Right.
how would they know how much
Yeah.
you owe? They
Yeah.
don't.
Yeah.
Yeah.
And it
So
also doesn't include
if
your,
they don't know
yeah,
if you co-signed for your son's car, they
Yeah.
don't know if you are co-signed for your friend's house, and that is going to affect those very, very sensitive
Yeah.
right.
Or if you have
ratios.
no credit rating. I know someone who has been living at home and has never had their own credit card. So they have no credit score, right? So yeah.
And some income doesn't qualify as income by certain lenders. So if people are working under contract or they have 5 part-time jobs, but one of them can't be documented or is all cash or what have you, that causes difficulties to prove income.
Right.
And so those are things that you're not going to get or disclose in an online calculator.
Yeah.
That you're only going to, because when you meet with a lender or a mortgage broker like Csilla, they're going to be asking those questions.
Yeah.
And definitely going back to last year, because they're looking at the last 2 years, and with the COVIDs and the shutdowns and CERB, you will have a T4 showing that this is your amount last year, but half of it was CERB.
Right.
Most of the lenders won't look at that.
Yeah. That's tough.
And these are just very specific details, and I can't. It's just generally speaking, but that's why you need to know exactly. And Derek was right. It's not done until you have the key in your hand,
Right.
and there are millions of little things that can
So
that
really, if you put in an offer, it gets accepted. That's a contract. You have to freeze everything don't do anything, right? Like you're on hold until those keys are in your hand.
Or talk to your lender, talk to your mortgage
Right.
broker and saying, something's come up and we would like to allocate some money for this, or we'd like to do that, or our car broke down and we need another new car. And
Right.
talk to someone like Csilla, and they're going to say, okay, you know what, I think this is the best way to do it. Maybe the best way to do it, and I'm throwing out an example or pulling one out of there. Maybe the idea would be just to go to a rental company and rent a car for the next 30 days,
Right.
right, rather than having the expense of a $40,000 new automobile.
Right.
That's just an example, but
Yep.
Csilla would be able to work with somebody like that to come up with ways and means that it wouldn't affect negatively their ability to close on that property.
Yeah. Yeah. And one of the other traps, when you're talking about penalties for getting out of a mortgage, situation that I had was when I got divorced, we wanted to sell the house, right? So we both wanted to go our own ways, and we had a sizable debt. So I couldn't afford to buy a house on my own, and wouldn't, yeah. So, but we had to pay a penalty because we sold the house and we were in a fixed term mortgage. And it was like, whoa, did not budget for that.
Yeah.
So, and that is a common occurrence, right? So when you are separating, that
Yeah.
is definitely something you need to ask some questions of your lender. Absolutely.
Yeah.
And that's what the benefit of having you, Csilla, right? As a mortgage broker, where you can have someone that I could have called and said, Csilla, we're getting divorced. What are my options here? And you would have been like, not worth it. Don't sell. Hang on. What can we do? Can we rent the house? Can one of you afford to stay in it? Like, what are the options? Because the penalties were massive to get out of them.
And the ability for either of you to buy another home. You might have the income and the down payment from the
Yep.
proceeds of the sale, but your lender is probably going to say to you, or I would say to you as your buyer agent, you know what, we can't get you a mortgage until you have a separation agreement in place.
Very
Right.
good, very good
Yeah.
point.
So,
And I had a couple of clients that asking like, why do you need to know that?
Yep.
I don't need to know that. We need to know that you don't have to pay them. It's all about the calculation. It's all about the math to
Yeah.
make sure that you don't pay a certain amount each month.
Yep. Yeah.
That's
Yeah.
what it-
And I know someone else who was being bought out of their family home when they split up. And there was a super complicated agreement of multi-year payouts, and it was a disaster. Well, I mean, it was very complicated. It wasn't a disaster. It worked out fairly, but it was so complicated. And yeah, any other financial, they were in the middle of that. And then the one spouse had an opportunity to buy a company, and so had to go through a whole qualification, financial. Oh my gosh. So it was like they
yeah,
needed
it
to
can
know
get
those
really
details of the
complicated,
payout.
Jana. Like you
Yeah.
said, it can get complicated situation by life challenge or whatever.
Yeah.
And that's why every buyer needs to make sure that they're working with professionals that can say, oh, by the way, did you know? Or,
Yes.
and is willing to take the time to, even if they think that that person already knows this, and I use that phrase a lot, you probably already know this, but
But
I
I
want to
need
make
to
sure
clarify.
that it got covered, that I
Yeah.
didn't miss it, right?
Well, and this is the thing. I think having a trusted advisor in terms of realtor, a mortgage broker, that's the whole point. Because there is no way someone who's not in the industry, well, not no way. I think it's much more difficult for someone who's not in your industry to be able to keep up on the changes, but also having the conversation like, hey, Csilla, we've got a variable mortgage right now, and we heard about the interest rates going up. What does that mean? What are the implications for us right now? Having a trusted professional that you can just ask those questions, because I know, like, we don't know what we don't know, and having someone to be able to ask those questions, to me, that's the whole point. I want to surround myself with a network of trusted advisors where I can just be like, I don't understand what's happening in the world about this. Please help me. I want to be able to ask questions. Or just to be like, I heard this. Does it have any implications for me? Because I don't understand it. I don't know what I don't know. So I think that's really a benefit. And both you, Derek, and you, Csilla, are trusted advisors. You are heart-centered people who have the best interests of your clients at heart. And you will do and be honest and behave with integrity. And that's what I love about you both, is that you are going to give advice regardless of the impact to you financially, right? Derek, I know you've told a few stories where you had some doubts coming from clients, you asked a few questions, and it turns out that buying the house that would have been best for your bank account was not in their best interest, but you were honest and said, listen, we need to really, why don't you step back, figure this out, and we'll make a decision moving forward. You weren't pushing them to be like, no, you should get this house. This house is really good, right? And same thing with you, Csilla, right? You're not going to get someone to sign on with you to be a client, promising them the world. You're the realist. You're like, listen, this is tough work, and this is what you're going to need to do, and these are the documents you need to provide. This is what I need to do. And again, if we can all step outside of our own experience and see from the other person's perspective, like you said, Derek, when you were talking about know that there's eyes and ears everywhere, not something I am a chatty person. I volunteer all kinds of information. So today, that's my biggest takeaway is like,
by the way, Shannon, that eyes and ears everywhere, when I counsel my buyers on that, they always say, you know what, when I sell my house, that's what I'm going to do. I'm going to have cameras and microphones up because I want to see what they're saying about my house.
Right? Oh my goodness. I don't want to know. I don't care if you don't like my colors. No, but yeah. And Csilla, the same thing with you. I know
and that
work your hardest to make sure that everything happens. And the number of stories you've told about the follow-up that you do that's actually outside of your role, but you just need to make sure the deal happens, because there's so many, especially in this time of COVID, it seems like things fall through cracks, and you follow up, right? So yeah, having a professional like you guys that you can truly trust that they have your best interests at heart, I think that's one of the biggest takeaways from today. Is there's so much information out in the world that we need trusted advisors to be able to connect with, to ask questions, or just to be able to say, I don't know what I don't know. What do you have to say about what do the interest rates mean? What does that mean? So, yeah.
You're absolutely right. But the other part of it as well, I agree with it. And I also know that there are times when I know that I have to refer to other professionals.
Yeah.
That I'm not qualified to give legal advice. I'm not qualified to give environmental advice. There's certain things I'm not qualified for, but there are people out there that specialize in that. And so there are times when I need to tell people, you need to talk to your lawyer about that. I'm not qualified to give you that information.
Right. So, and again, that's part of being a trusted advisor, is to stay in your lane, right? This is what I am an expert in. Anything that's outside of that, I have trusted people that I can recommend to you.
That's
or
right.
I have names that I can suggest. I don't know what your experience will be, but I have names. So that's an important part of being a trusted advisor and a truly heart-centered entrepreneur, is to have people to be able to say, that's not my wheelhouse, but here, go talk to so-and-so. I love that.
And it's also okay to say, I don't know.
Yeah. Yep.
But I'll find out.
Absolutely.
Yeah.
And I have to add to that. Like I had a chance to work with Derek, and I was so peaceful throughout the whole process because he just took care of it, and it went smooth and easy, and it was done. Everybody was happy at the end, and that's what we all want.
That's what good service is. Yeah.
That's what the service is, to make it simple and good for everybody.
It's what everybody wants is to be as stress-free and as hassle-free as possible. However, challenges do come up, and sometimes things come up unexpectedly. Yeah. And, we just have to be there to make sure that we're going to guide our clients through the process, and that we're going to let them know that we're going to do everything that we can to make sure that there's a good outcome.
And Csilla, you said it best when you were talking about, when you were sharing your one story about your client last week, and you're like, did I tell you to panic? I didn't tell you to panic. Don't panic. I got you covered.
Not
And
time to
that's the-
panic. I'll tell you when it's time to panic.
I'll tell you when it's time.
Exactly. Derek
that's the beauty.
uses the firefighter, like I
Yeah.
put out fires.
Yeah.
And when I don't know, because I don't know, I have a team behind me that they've been Greater Golden Horseshoe. They've been in the industry for 30 plus years. They're experienced agents, brokers, and we have a meeting once a week at least.
So you're informed, and yes, you have a team behind you. That's amazing.
Absolutely,
Yeah.
it's that, and that's what really that's where the whole knowledge is behind there. That we have people to turn to. Okay, this is the scenario, and every time something new comes up.
Yeah.
And that's another beautiful trait of a heart-centered entrepreneur, is having that growth mindset where you're constantly learning. You're like, ooh, I want to hear all the stories, so that if that comes up for me, I'll be like, ooh, I've heard of this before, and this is what I'm going to try, and I'm going to talk to this person. And again, that's having that team, that network surrounding you of other trusted advisors to help, find solutions. So yeah, that's awesome. Great.
Thank you, Shannon, for inviting us and coordinating and facilitating this presentation. And thank you, Csilla, for all of your support and all of your information. Thank you very much, both of you.
Thank you. This was so great. There's so much knowledge jam-packed into this hour presentation. So I appreciate both of your time. I appreciate that you brought your wisdom, your expertise to this, and we can share this recording and make sure that it gets out into the world, because knowledge is power, and the more we know. And again, the monthly Embrace Showcase, the whole point is, I love you guys and we get to see you regularly, but I love giving you an opportunity to get out into the world to showcase how amazing you guys are. So again, that will build trust as well. So I think you're amazing. I want everyone else to know how amazing you are. So thank you for your time. Thank you for sharing all your wisdom. This was amazing. Thanks so much.
Bye for now.